going on, ladies and gentlemen? Butcher Wall Street coming at you with a new report that was just released by the Bureau of Labor Statistics. It's good to see all you guys and gals here in the chat. Thank you for joining us today. We've got this article that we're looking at right now. This information was just released by the Bureau of Labor Statistics. And it looks like bankruptcy filings have increased year to date through May, higher now than they have been since 2010. And it's only June. As you can see here, this article from spglobal.com says U.S. corporate bankruptcies crept higher in May over the prior month as higher interest rates and a slowing economy are pushing many companies over the edge. S&P Global Market Intelligence recorded 54 corporate bankruptcies during May. And for those of you that are unaware, these are all multi-million-dollar companies, upwards of billions of dollars. Those 54 corporate filings for bankruptcy in May was even higher than the 52 that occurred in April. And as it says here, in the first 5 months of the year, 2023, has recorded more bankruptcy filings than any comparable period since 2010. And we're barely halfway through the year. This only includes 5 out of 12 months so far for 2023. As you can see here in yellow, it shows the rest of the year. And currently in blue, just what's occurred in the last 5 months. That does not include this month of June, obviously. Look at what we're looking at here. 2020, the last time we saw this many in 1 month was June of 2020 and July of 2020, when the United States federal government shut down our entire economy. This is limited to public or private companies where the filings are greater than or equal to $2 million or more, and where assets or liabilities at the time are greater than or equal to $10 million. One of the biggest that we've seen already is Vice Media. You guys might be familiar with Vice Media, right? A group of creditors plans to buy Vice Media out of bankruptcy for $225 million as it continues to operate during the bankruptcy process. You got Monotronics International, the company that owns Brink's Home Security, filed for bankruptcy May 14th. They announced on May 8th that it entered a restructuring agreement with lenders holding more than 3/4 of its debt, and that plan would reduce its debt load by about $500 million. Look at here how many, this is liabilities at initial filing of millions. You know, you got 50 million, 100 million, 100 million, 50 million, 500 million, 50, 10, 1 billion, 100 million, 1 billion, 1 billion, you know, massive companies. American Service Insurance Agency, Benefit Technologies, Paradox Resources, Envision Healthcare, $1 billion plus. Kitty Fenwal, discretionary. Monotronics Industrials, $1 billion. Financial companies, healthcare, industrial. This is not good for the economy or the stock market whatsoever, regardless of what kind of bullshit we're seeing from the liquidity pump from the Federal Reserve's multiple Fed discount borrowing windows, reverse repurchase programs, and BTHFP. In May, you're looking at 3 companies joining the ranks entering bankruptcy with more than $1 billion in liabilities, bringing 11 companies already this year in the billions of dollars. From Party City, Serta, the mattress company, Avaya, the technology company, Diamond Sports Group, SVB Financial, you guys should all know what that is, Bed Bath & Beyond, LTL Management, Whitaker Clark, Monotronics, Envision Healthcare, and Kitty Fenwal. Look at the bankruptcy filings by primary sector. Consumer discretionary leads the way with 37, and then industrial companies, healthcare corporations, financials, banks, energy corporations, consumer staples, IT, communication services, even some utility companies, materials and real estate companies are going bankrupt right now. Take a look at who's losing their jobs. Oh, but before I move on, just so you guys know, the May filings brought the 5-month total here that we're looking at to 286 filings. That's the most in this time period since 2010, 2010 recession, and even outdid the 262 filings that occurred in the same time period in 2020. You add all these up in the same 5 months, there's been more now than there was during when the entire United States economy was shut down in 2020 in the same 5-month period. Looking back here at 2016, owning a trucking company, I know exactly what that was like. That was really rough. There was a ton of bankruptcies. We managed to survive by pivoting and acting smart. But the oil bust that occurred then really crushed transport in 2016. Oil companies, gas drillers collapsed. S&P Global recorded 265 filings in that same period, mainly oil and gas and transport. And now in 2023, we've already seen way more. The only time we've seen more than we have in these 5-month period is all the way back to 2010, to the great financial crisis that occurred. That's the only time we've seen a larger number of filings. Oh, this is a good chart. Check that out. Here you go. The U.S. oil bust, the pandemic, and the end of easy money. Huge shout out to Wall Street on that one. Wallstreet.com. SVB Financial collapsed. Avaya, the telecom software, and even Bed Bath & Beyond has filed for restructuring. Retailers are not looking good. See, the problem now is that debt has gotten a lot more expensive than it was even back in 2016. And that leaves investors that are thinking about buying this debt and banks a little less likely to do so and a little tightening up a little bit more. We are seeing a record percentage of interest-only mortgages on commercial mortgage-backed securities and commercial mortgages right now. It is around 81% of all commercial mortgages are interest-only mortgages in the commercial sector. This is the end of easy money. It's over. And with all the piles of debt that companies have had, they're not going to make it now that easy money and quantitative easing is over. So the economy is normalizing the current interest rates that were typically considered fair before all the QE that occurred in the last decade. But now they're getting hung out to dry. So these bankruptcy filings that we're seeing are going to crush companies that are in massive corporate debt. That's why smart companies do smart things, like issuances of new shares, which is what Ford did in 2006 and totally turned around their company. They were billions of dollars in debt, issued new shares, paid it off, and the stock went from $1.70 to $17 a share just based off that alone over several months. Many companies of these companies will emerge from bankruptcy with less debt if they want to thrive, and others will be destroyed and sold off in bits and pieces like Vice Media. So this is like a corporate cleansing, if you will. Look at the number of services that are no longer required. These are the fastest shrinking jobs. Again, retail, right? Cashiers are down 336,000 jobs almost. Secretaries and administrative assistants down 207,000 jobs. And these are just projections in employment between 2021 and 2031 from Statista.com. This is a new chart they just put out. Office clerks down 131,000. Customer service reps, 105. Executive secretaries and administrative assistants down 103,000 almost. Assemblers and fabricators at factories down 96,000. Supervisors and retail sales workers down 78,000. Bookkeeping, accounting, and auditing clerks down 77,000. Even fast food clerks is going to be down 69,000. See, cashiers are at risk of being replaced by self-checkout, projected to see the biggest drop in employment with 335,000 fewer jobs in 2031 than in 2021. And it's so on, and it explains the rest of those. I do not use self-checkout because I'm not paid to work for these retailers. I'm not on their payroll. They haven't trained me how to use their self-checkout. And I will not work slave labor for major retailers, to which I'm paying very good money. And I hope a lot of you guys feel the same way. I'll go wait in line. I'll go tell the manager to open up another register before I pay at self-checkout. I used to use it all the time. But as of late, with the major increase in self-checkout lanes and the reduction in actual staffing, I don't think I should work for $0.00 an hour to bag and check out my own groceries. What do you guys think in the chat there? What's going on in the think tank right now? You lazy asses using self-checkout? You don't want to talk to people? Can't say I blame you. If you want to be quick and use self-checkout, can't say I blame you, but that's a pretty good way for retailers to force you to use it, right? So the Bureau of Labor Statistics points out that these three groups, office and admin, production, occupation, and sales, and related occupations, are going to lose the most jobs over the next decade. So we're going to see a huge reduction in, secretaries, office clerks, customer service reps. And even right now, you're going to see a reduction in mortgage originators and customer service reps. This was just updated 6 hours ago. HSBC withdraws mortgage deals for new borrowers. This is a big deal. HSBC Bank has temporarily withdrawn mortgage deals for new borrowers in a further sign of turbulent times in the UK lending market. The measure suggests pressures on lenders to hike mortgage rates. The bank said it would remove, quote, all its new business, residential, and buy-to-let products on yesterday, with deals available again on Monday. Rival lender Nationwide said it needed to increase fixed rates to ensure they remain sustainable. Mortgage rates have been rising since recent data showed that inflation was not coming down as expected. As you can see here, they're now predicting that Bank of England will raise rates from 4.5 to as high as 5.5%. They are literally concerned about their own solvency. HSBC said on Thursday that it was withdrawing new deals to ensure that we can stay within our operational capacity and meet our customer service commitments. It makes it likely that HSBC will raise rates on Monday, and brokers expressed surprise at the speed of the withdrawal, which came initially with only 4 hours notice, only for them to be pulled after about 2 hours. So products and rates for existing customers were still available, but they pulled all new mortgages. So if you were about to close on Thursday, Friday, or Monday, you're not closing on that house. You're not going to be able to buy. And if you're selling a home to someone that had an HSBC mortgage about to close, you're now no longer able to sell. They'll have to see if they requalify at the higher interest rate. This isn't the only time this is going to happen. This is going to continue to happen over and over again. Because these banks are literally concerned of how much money they're losing on these new mortgages as the interest rates continue to increase. They have to continue to increase their rates. Otherwise, you're getting a discount. And of course, retail investors can't get a fucking discount. That's not like banks. CPR, thanks so much for your super chat, my friend. You're too kind. Take a look at this. What could destroy a new bull market? It is a recession. A recession based off of bankruptcies, corporate bankruptcies, job losses, quantitative tapering, interest rates rising, banks withdrawing mortgages, commercial mortgage-backed securities, and real estate, residential mortgage-backed securities collapsing. The United States Treasury issuing $1.3 trillion in new issuances of Treasury bills now that the government has raised, actually not raised, they've eliminated the debt ceiling for until Biden gets out of office. With the debt ceiling finally passed, the Treasury is expected to issue at least $1.2 trillion in Treasury bills. Half of that is going to restock its coffers at the Federal Reserve via this Treasury General account. It's nearly down to zero, and the Treasury has the ability to replenish it by raising more debt than it needs. But per this chart, it gives us a real sense of what the actual liquidity environment looks like when we take the Fed's balance sheet and subtract reverse repurchase programs, Treasury General account, and then look at the Fed emergency borrowing window and the discount, discount window. So since last October, the effects from quantitative tightening have been offset by increases in the RRP, the reverse repurchase program, and the Treasury General account. But if that liquidity line now nosedives as the Treasury General account gets replenished via the issuances of these $1.2 trillion in Treasury bills, not all that money can come from the reverse repurchase program because there are more than just money market funds and shadow banks that need to buy those T-bills. That could easily cause an outflow from equities markets, from the stock market. People know that this is coming, at least smart investors. And people are wondering when a recession will arrive. But as you guys know, Europe has already been in a recession. We discussed it on yesterday's channel here, yesterday's video live stream in this channel. And we proved to you that the federal governments and the central banks always revise the data the quarter after, so that in the time being, people with 401ks and thrift savings plans and IRAs and ISAs think that everything looks dandy in the markets. Look at what happened the last time we had sustained sideways trading in overall liquidity. It collapsed. And we're seeing those same patterns now with much higher interest rates, much higher Fed bailouts through multiple programs, the RRP, the BTFP, the discount borrowing window. And now the Treasury General account is going to be pulling $1.2 trillion in Treasury bills over to it out of equities markets. Don't be fooled by a bull run in a bear market. This week, this was next week here, we're looking at Tuesday, June 13th. We're going to be looking at month-over-month inflation, year-over-year core inflation, and year-over-year inflation. Wednesday, we're going to be looking at producer price index month-over-month, Federal Reserve interest rate decision, and the FOMC economic projections, as well as the Fed press conference. Thursday, we got retail sales month-over-month. Friday, we have the Michigan consumer sentiment. And then next Tuesday, we've got building permits, preliminary. Next Thursday, we've got Fed Chair Powell testimony. And next Tuesday, the Tuesday after that, the 27th of June, we've got durable goods orders month-over-month. Meanwhile today, Jim Cramer loves the FANGMAT stocks. He says, my money is on Apple and VR. Big. I think I know who I'm going to short next. This is not financial advice. I'm not a financial advisor. I'm just speaking for myself. And the universe Cramer speaks for itself. At the same time today, Friday, June 9th, UBS Bank and the Swiss government have signed a loss protection agreement over the Credit Suisse takeover. You see, Credit Suisse was left with legacy problems from the collapse of Archegos, the family office that shorted GameStop and AMC very heavily. They got crushed and then went bankrupt. The owner of Archegos fled the country, and Credit Suisse, the prime broker, was left holding that bag. Now, UBS and the Swiss government signed a loss protection agreement worth billions of dollars because now UBS is holding that bag. And the only way they were willing to do the purchase and takeover of Credit Suisse was through a provision which will see the Swiss government cover losses of up to 9 billion Swiss francs, the equivalent of 10 billion US dollars, following UBS's acquisition of its former rival, Credit Suisse. This is guaranteed on a designated portfolio of Credit Suisse non-core assets. Once UBS incurs the first 5 billion Swiss francs in losses. So UBS knows they're going to lose 5 billion Swiss francs. That's like 5.5 billion US dollars. And once that occurs, then they're going to get an additional $10 billion US bailout from the Swiss government to cover those losses, because of the legacy problems that UBS now faces due to the legacy problems that Credit Suisse faced from the collapse and complete and utter bankruptcy of Archegos family office, which was using swaps and rehypothecations to hide their short positions of AMC and GameStop and other meme stocks. Ladies and gentlemen, they come out and tell us, quote, "The priority for the federal government and UBS is to minimize potential losses and risks so that recourse to the federal government is guarantee is avoided to the greatest extent possible." The administration added that it facilitated the deal to, quote, "safeguard the financial stability and thus avert damage to the Swiss economy," but had always agreed to guarantee a portion of losses due to UBS taking over a portfolio of assets that, quote, "do not fit its business and risk profile." Period. I don't think I have to say anything else, except if you guys may or may not have seen what this says. We're going to be so fucking rich. I don't believe in this bull market because it's not a bull market. It's a bull run in a bear market. The global economy is getting crushed. Interest rates are through the roof. Commercial and residential mortgage-backed securities are about to get crushed. We're going to see bankruptcies in those sectors like we haven't seen since the great financial crisis. Tech is more overvalued than it was at any time in history. The dot-com bubble is going to look like a fucking joke after this. The Fed is purposely making you lose your jobs and homes and cars so that they can reduce inflation. Inflation is purposely being run hot because that allows the federal government an easier way to pay off its debts by inflating the value of the dollar compared to what it was worth when they took out those loans. A black swan is not always by accident. It is on purpose, and it is purposely orchestrated, just like it was in 2020, 2008, 2011 during the debt ceiling crisis, 2016 during the oil and gas crisis, and even previously. These government entities know exactly what's happening. So as you can see here, the bank confirmed intentions to keep their headquarters, the merged group in Switzerland, for the duration of the loss protection provisions. But they didn't state after. UBS will manage these assets in a prudent and diligent manner and intends to minimize any losses and maximize value realization on those assets. UBS is a very conservative bank. Credit Suisse and Archegos were not. Now they're getting caught holding a bag of excrement and swaps that eventually must be closed out. Synthetic shares and rehypothecations and shares sold that have not been purchased. And eventually, all shorts must close out their position. With the issuance of new shares from AMC, a conversion and a reverse split, it's very likely that UBS loses a lot of money. They're not the only ones that shorted these meme stocks. There are many, many hundreds, if not thousands, of other brokerages, prime brokers, hedge funds, family offices, and institutions, qualified institutions, that have shorted those stocks, like State Street Bank, Susquehanna, Citadel, Virtue Financial, Bank of America, Credit Suisse, Archegos, and the list goes on. And just like you guys saw in January of 2021, in June of 2021, when those meme stock run, they can often run thousands of percentages. Not to mention one more thing. For those of you that may be unaware, the volatility index right now has just reached the same levels that it saw, the all-time, not the all-time, but the low levels that it saw, and it has not seen since February 2020, right before the stock market crash during the COVID lockdowns. There are no COVID lockdowns right now, but there is upcoming FOMC meetings, interest rate hikes, inflation data that has proven that transitory is not the case. It is sticky. It is here to stay. And corporations and people alike have to get crushed. They have to get crushed in order for the United States government to more easily pay off their debt. At this point, all they're paying is interest. This is a crisis that is not over. It is ongoing. And I will leave you with that. Make sure that you are properly hedged. Act accordingly. My friends, I wish you peace and wealth. Have yourself a great rest of your day. Act accordingly.
Yeah, you don't know all the shit that I've been through, all the pain and the struggle that I lived through. Now I'm rolling up these papers that I smoked through, thinking about all the shit that I've been through. You don't know all the shit that I've been through, all the pain and the struggle that I lived through. Now I'm rolling up these papers that I smoked through, thinking about all the shit that I've been through. Now I'm sipping on this whiskey. Got one chance and it's risky, so you can't play around. And I got my team behind me like a background. I don't never back down, picking up the slack now. Now I'm focused, keep on grinding for my stacks now. I'm feeling lost in this ocean, where's a lighthouse? I keep on swinging for the fence and I ain't strike out. And yeah, that's how I'm feeling, yeah, that's how I'm feeling now. We're not here for a long time, yeah. It's 9 to 5, it's a long grind, yeah. A lot of to success, it's a long climb, yeah. Now I'm sitting here making up for time, yeah. Man, I took so many losses that I lost count. I didn't know what I was made of, but I found out. And this life will blindside, you better look out. These haters wanna see you fall and get you took out. Yeah, cause I fell on my face, and this life is a race. I keep on checking my place. Now I'm riding for my team, you can tell by my plates. And this life just threw a hook, it caught me right in the face. But I'm getting back up, I'll do whatever it takes. I'll climb a couple of mountains, I'll swim a couple of lakes. Don't got time for the bitching, don't got time for complaints. Now you going through some shit, now tell me how does it taste? You don't know all the shit that I've been through, all the pain and the struggle that I lived through. Now I'm rolling up these papers that I smoked through, thinking about all the shit that I've been through. You don't know all the shit that I've been through, all the pain and the struggle that I lived through. Now I'm rolling up these papers that I smoked through, thinking about all the shit that I've been through. Now I'm living with my choices, I just own my mistakes. Cause I'm screaming fucking hand down, I ain't searching for breaks. But I'm barely treading water and this life is the lake. Now the pressure keeps on building as I'm raising the stakes. I ain't looking for advice, now I'm looking for space. Now I'm dealing with these losses, but I know I hate the taste. Now I'm sitting back, I'm thinking as I smoke into the face. Now it's time for these apologies, the time is too late. So bygones be bygones, I'm on business with a tie on. So fuck a shoulder to cry on, I'ma get a hopping like Zion. Let's raise a glass, I'll toast that. Reminisce, we roast that. How I wrote them and ain't wrote back. I'm never flimsy, the goat's backs. I don't feel bad, no not at all. When a lot of years, write a lot of calls, a lot of birthdays without a call. Ain't got time for that, so fuck a fraud. You ain't there for me, I ain't there for you. You won't bleed for me, I won't bleed for you. All the hard times I lived through, keep moving, gotta get through. I got goals and cash I gotta get to. All these memories that I flipped through. If you can't relate, then don't judge. I stand my ground, I won't budge. I'm sitting back cause I burn buds. I swear to God, this life's good. You don't know all the shit that I've been through, all the pain and the struggle that I lived through. Now I'm rolling up these papers that I smoke through, thinking about all the shit that I've been through. You don't know all the shit that I've been through, all the pain and the struggle that I lived through. Now I'm rolling up these papers that I smoke through, thinking about all the shit that I've been through.